All right, so welcome back to the deep dive, where, as always, we try to go a little deeper into what's going on in the business world.
Yeah, today we're going to take a look at Gap, ticker symbol GAP, their most recent earnings call.
We're going to look at the numbers and what management had to say and try to figure out what it all means.
Yeah, there were definitely some things that jumped out at us.
So let's start with the basics,
Okay.
How did they do in Q4?
Yeah, so comparable sales were up 3%.
3%.
Which is pretty good when you consider that they had one less week in their fiscal calendar this year.
Oh, right. Yeah.
So actually, like, the underlying growth is even stronger than that 3% number.
Yeah, that's a good point.
And then if you look at the full year results, all four of their brands, Old Navy, Gap, Banana Republic, and Athleta, had either flat or positive comparable sales.
Wow, that's impressive.
Yeah, it's a pretty broad-based performance.
Yeah, I mean, especially these days, like, it's tough out there in retail, so to have all four of their brands doing well, that's pretty impressive.
Yeah.
So let's break it down, brand by brand. Let's start with Gap, the namesake brand.
Yeah, so Gap actually had a really strong quarter. Comparable sales were up 7%.
Okay.
And what's even more interesting is that this is their fifth consecutive quarter of positive comps.
Oh, wow. So this is not just like a one-off good quarter. This is a trend.
This is a trend, exactly. It looks like they've really turned a corner.
Okay. So they're doing the fun right.
Yeah.
And it's working.
Yeah.
Okay. Let's move on to Old Navy, which I feel like has been their star performer for a while now.
Yeah. Old Navy is a powerhouse. They had another good quarter with comparable sales up 3%.
Okay.
And this is their eighth consecutive quarter of market share gains.
Wow.
So they are really dominating the U.S. specialty apparel market.
Yeah. And how are they doing that? What's their secret sauce?
Well, management highlighted their denim and activewear categories as being really strong.
Okay.
And they're also planning to continue innovating in those categories.
Okay. So they're not just like resting on their laurels. They're still pushing forward.
Exactly. They're staying ahead of the trends.
Okay.
And that's why they're winning.
All right. How about Banana Republic?
Yeah, so Banana Republic also had a good quarter with comparable sales up 4%, and they also gained market share.
Okay.
And it seems like their efforts to really focus on their women's division are paying off.
That makes sense. I mean, that's a huge part of their customer base.
Yeah, absolutely.
And it's a very competitive segment. So if you can win there, that's a big deal.
Yeah, you've got to get the product right. You've got to get the marketing right.
Yep.
So it seems like they're doing that.
Okay, now the one brand that didn't have quite as strong a quarter was Athleta.
Yeah, Athleta's comparable sales were down 2%.
Yeah.
But they did manage to maintain their market share in the very competitive women's activewear category.
Okay, so it's not like they're falling apart.
No, not at all.
They're just not growing as fast as they were maybe.
Yeah, right. Yeah. Exactly. And management actually talked about this being a reset year for Athleta.
Right.
They're really focused on re-engaging their core customer and trying to attract new customers as well.
Okay, so maybe next year. We'll see.
Yeah.
Athleta bounce back.
We'll see.
All right, so we've talked about the top line, the sales numbers.
Right.
Let's talk about profitability.
Okay, so in Q4, their gross margin was 38.9%, which is flat year over year.
Okay.
But their merchandise margins actually improved slightly.
Okay, so that's encouraging.
Yeah, and if you look at the full year, their gross margin expanded by 250 basis points.
Wow.
Which is really strong. That means that they're getting better at managing their costs and potentially even raising prices.
Yeah, that's always a good sign.
Yeah.
So let's talk about expenses. How did they do on that front?
So their SG&A expenses were in line with expectations, and they were actually lower than last year, both in Q4 and for the full year.
Okay, so they're keeping costs under control.
Yeah, they're running a tight ship.
Which is good to see because, sometimes when companies are trying to grow really fast, their expenses can kind of get out of control.
Right.
So it's good that Gap is being disciplined.
Yeah, absolutely.
And as a result of all this, their earnings per share for the full year were $2.20.
Yeah. Which is their highest EPS since 2018.
Okay.
So things are definitely moving in the right direction.
Yeah. And they ended the year with a very strong balance sheet, $2.6 billion in cash, and they generated $1 billion in free cash flow.
Yeah. So they're in a great position to invest in the business and keep growing.
Okay. So they've got the money, they've got the momentum. What are they going to do with it? What did management say about their plans for the future?
Well, they talked a lot about continuing to focus on financial and operational rigor and also about their efforts to revitalize their brands.
Okay, so kind of a two-pronged approach.
Yeah, exactly.
Ensure the business is running smoothly.
Yeah.
And also make sure that the brands are still relevant.
Right. And they specifically highlighted the success they've had with what they call their brand reinvigoration playbook, particularly with Old Navy and the Gap brand.
Okay, so they have a system and it seems to be working.
Yeah.
So what does that playbook look like for each brand?
Well, for Old Navy, it's all about denim and activewear. They're going to keep investing in those categories and coming up with new and innovative products.
Okay.
And for Gap, they're really trying to appeal to a new generation of customers while also staying true to their roots.
Right. It's a tough balancing act.
It is.
But they seem to be pulling it off.
Yeah, they're doing a good job with their marketing and their collaborations.
Okay. And what about Banana Republic?
So for Banana Republic, the focus is on reestablishing themselves as a premium lifestyle brand. They're leaning into classic styles and refining their assortments.
Okay. So kind of going back to their roots a little bit.
Yeah, exactly.
And for Athleta?
For Athleta, it's all about this reset that we talked about. They're trying to reconnect with their core customer and also bring in new customers.
Okay. So we'll have to see how that plays out.
Yeah.
So beyond the brands themselves, Gap is also making some big investments in their platform, particularly in technology and AI.
Yeah. They're really trying to use technology to improve efficiency and enhance the customer experience.
Okay. And how are they using AI specifically?
Well, right now they're mostly using it for employee enablement, but they have plans to use it for customer experience and product development in the future.
Okay. So they're really thinking ahead.
Yeah, they're trying to stay ahead of the curve.
And they're also being very disciplined about cost management.
Right. Yeah, they're always looking for ways to save money, and then they're reinvesting those savings into high growth areas.
Okay, so it's not just about cutting costs, it's about cutting costs in the right places and then using that money to grow the business.
Exactly.
Smart.
Yeah.
So what kind of guidance did management give for fiscal year 2025?
So they're expecting net sales to grow by about 1% to 2%. And they did mention that there will be a slight headwind from foreign currency exchange rates.
Yeah.
But they're still expecting Old Navy and Gap to perform well. They think Banana Republic will stabilize, and they're expecting a more gradual recovery for Athleta.
Okay. That makes sense given what we've talked about.
Yeah.
What about profitability?
So they're expecting their gross margins to expand slightly.
Okay.
And they're also expecting SG&A leverage, which means that their SG&A expenses will grow at a slower rate than their sales.
Okay, so that's a good sign of efficiency.
Yeah.
And all of this is expected to lead to operating income growth of 8 to 10%.
Yeah, which is really strong.
Yeah, that's great.
Yeah.
And one other interesting thing they said is that their capital expenditures are going to increase significantly in 2025 to around $600 million.
Yeah, and most of that spending is going to be focused on organic growth opportunities.
Okay, so they're seeing some real potential out there, and they're willing to put their money where their mouth is.
Yeah, exactly.
And then finally, they're planning to close about 35 stores, mostly Banana Republic locations.
Yeah, they're continuing to optimize their store footprint.
Okay, so big picture, what are your key takeaways from this earnings call?
Well, I think the biggest takeaway is that Gap's turnaround is gaining traction.
Okay.
Old Navy and Gap are both doing really well, and they're gaining market share.
Yep.
And the company is demonstrating strong financial discipline.
Yep.
So I think there's a lot to be optimistic about.
Okay. But there are still some challenges, right?
Yeah, Athleta is the biggest question mark right now.
Right.
We'll have to see if their reset strategy works.
Yep. And we'll also have to see how their big investments in technology pay off.
Right. Those are definitely things to watch.
All right. So now for the fun part of the show.
This is not financial advice.
It's time for...
Yeah.
This is not financial advice.
This is purely hypothetical.
Purely
It's
hypothetical.
just food for thought.
Exactly.
Okay, so we've talked about how well Old Navy is doing and how they're really making a push into activewear.
Yeah. And they want to be the #1 family destination for activewear.
Right. So here's a thought. What if we went long Gap?
Yep.
Betting on the continued success of Old Navy,
Okay.
but then at the same time, we hedged our bets by shorting one of Athleta's competitors, a competitor that's really focused on that premium activewear segment.
Okay. So we're not betting against Athleta directly,
Right.
but we're saying that maybe the overall market for premium activewear is going to shrink a little bit.
Yeah. Or maybe Old Navy is going to take some share from those premium brands.
Right. Because Old Navy is more value oriented.
Exactly.
So it's kind of a bet on the consumer saying, you know what? I don't need to spend $100 on yoga pants.
Right.
I can get perfectly good yoga pants at Old Navy for $50.
Yeah. And if Old Navy can really disrupt the activewear market,
Right.
that could have a big impact on those premium brands.
Yeah, that's an interesting idea.
So again, this is not financial advice.
This is not financial advice.
Yeah.
This is purely hypothetical.
Just something to think about.
Exactly.
Don't go out and make any trades based on this.
Do your own research.
Yeah, always do your own research.
All right, so that's our deep dive into Gap Inc.
Yeah.
Hope you found it helpful.
We hope you learned something.
And as always, let us know what you think.
Yeah, we'd love to hear your thoughts.
Jump into the conversation on your favorite platform and let us know what you think about Gap.
And what you think about our not financial advice trade idea.
And remember,
Yeah.
this is not financial advice.
Always do your own research.
All right, thanks for joining us.
We'll see you next time.
Bye.